Okay, guys. So looking at London. By the way, before we even begin, because I want to make this as interactive as possible, just the basics of me trying to get where do I start today. You all understand the basics of the strategy, correct? I'm hoping you do. So basically, it's very simple. We take advantage of one 15-minute candle and then ride that trend into the second 15-minute candle. Yes, and that is all what we're doing. The markets are fractal, which means that this sort of setup, the sort of entries that we're looking at, is on. You can implement them on any asset class, right? So there were questions: can we do this on gold? There were questions: can we do this on indices? Market moves from zone to zone, and I will explain what that means. The places where it reacts from is the same right across the board. So looking at this now, let's get this started. I am looking at London. So this is my chart. This is actually the way you're seeing it on screen is my actual setup. I have my London session and then I have my New York session, and these are the timings that I am looking in available at charts. I also look at candles that are pre-London right here. So this big one, or I will look at what is going on pre-London, because if they are massive big candles, then the chances are that the probability would be that these candles are going to continue and give me that trend direction. Let's look at one by one. And if you have any questions, let me know. The first candle, this is where I'm at, right? I drew a box around it, just like everything else. And I am looking again. So the first thing that I'm looking at is what? I'm looking at for liquidity, right? Now, liquidity for me, as I explained before, is a low that breaks a high. So where do I have a low that got taken out, right? So in my opinion, when I'm looking at this, the low would be this spot right here. It does not matter if it is part of the first 15-minute prime candle or it is part of the second 15-minute, which is the echo candle. It does not matter. Obviously, there are certain edges, right? But those edges are so minute that it does not matter really if you take the liquidity from the formation of the first candle or the formation of the second candle. However, I will give this disclaimer that if your liquidity gets formed and swept in the second candle, which is the echo candle, the chances or the probability is higher for a take profit hit compared relatively to if you took the liquidity in the first candle. Yeah, just statistically talking, the chances are there. However, they're quite small. In the long run, it really doesn't make sense. It doesn't really make a huge difference, right? Because they're both very powerful setups. So in my opinion, this would be the low. This low broke this high, got taken out, but unfortunately, and it got swept right here, right? So let's mark that down. So we have this guy taken out, and we have that liquidity swept. Now the question is this: what zone am I looking at here? There is no zone. There is very efficient price action that is moving up. This is the trend that I'm talking about, right? This one large 15-minute candle. This is the 1-minute trend that is being formed in here, right? For me, whenever I'm looking at such trades, if I don't get a zone to trade from, so those are the ones that I avoid. And the reason for that is because they majority of the time either will end up in a break even or will end up in a loss to me. And for me, I need to have very clear elements of what works, what does not work. If A happens, then B happens, then C, and that is when I'm going to enter. Simple as that. So exactly what happened over here. We had a low that got taken out, and then we had the sweep of the candle, but I did not find a zone. There was just no zone. There was a fair value gap. I strictly don't trade fair value gaps. You can if you want to. There is no problem in it. There's a lot of traders out there in the market that exclusively trade the fair value gaps. The only problem is that when I look at my data, and I've done tons and tons of back testing, for me, it did not work. It did not give me that edge on a day-to-day basis that I can say very clearly that this is the trade that I want to take, right? You could have taken this trade if you do the trade value, the fair value gaps, and you could have entered right at the breakout of this reaction candle. So this would be the reaction candle, yeah? You took the liquidity, you had that reaction candle, and you could have entered the trade at the breakout of this. This would have resulted in a 1.73 R with a 2.6. I don't like 2.6 R, so I would have then expanded this to 3, which is the most minimum comfortable stop loss that I've seen time and time again play out, right? Between 3 and 5 R pip stop loss is a very nice place where you can have an easy 2R trade in the next 15-minute candle, depending on the range of that candle. Now, obviously, if you go onto the third candle and the trend decides to continue, you can end up with a 3R. And if you have the fourth 15-minute candle and the trend decides to continue, you can end up with 5R, 6R, 9R. I've had trades that went up to 5, 6, 7Rs. Obviously, they were not live trades. I don't hold it that long. But what I'm saying is that on a single 15-minute candle, if you're just trying to capture that run, majority of the time, 2R is what you will get in that 1-minute candle, right? So the question is, what conditions do I look for in a good reaction candle? Very, very simple. A reaction candle is where you are breaking fractal structure, right? So let's start from here. You have a high, you have a low, a high, a low, a high, a low, a high, a low, a high, a low, and then this high got taken out. That means that the order flow has shifted. When I say order flow has shifted, this is different from structural shift. A structural shift is actually the lows and the highs that get broken. Fractal structure is also different because fractal structure means that the range, this low has to go. So this, from this high to this low, they're all in sync. None of the candle lows are being broken, right? When this candle gets printed, it breaks this low. That means there is an order flow change just for that. But none of the other confluences line up, right? You are in an uptrend. Yes, it broke this low, but none of the other confluences line up. So when this high gets broken of the previous candle, for me, that is the first indication that it is a strong candle that is going to the upside and the order flow has changed. Your reaction candle is where you have the order flow shift over here, right? Okay, moving forward. And in fact, let's look at it, right? What do I mean by this? So if let me just cut this here so I can go back in time, and let me mark this high here, right? As such, okay? And let me go to 15 seconds, and then we'll go down to 10 seconds. You see what happened here? This was the start of the high that we marked, right? And this is the early indication that we are having that order flow shift. So this, this candle right here, this push has already given me the first structural shift on the 15-second. But you're trying to read your chart on the 1-minute time frame, analyzing what is happening on the 15 seconds. So that wick break at the top is essentially your order flow shift, which is a structural shift on 15 seconds. If I went down further into 10 seconds, you will see the same, right? It'll be more pronounced. And this is where I want to be involved in, right? This push is where I want to be involved. Okay, so over here again, we took that trade. It came back in for a 1 hour. This would have been a break-even trade. Yeah, and break-even happens all the time. Break-even is a win in my books because you haven't lost any capital, right? You don't want to be losing capital on every trade, thinking that it's going to be a win. Break-even is not a loss; it's definitely a win. So I'll take some time and read some questions here. What conditions do I look for a good reaction? We answered that. Like candle structure, I can also see there is a fractal shift. Absolutely, there is definitely a fractal shift also over here, right? So if this high gets broken here at this point in time, this is the fractal shift here. Yeah, very good. Okay, so let's move on. So this is something that I did not take, and it would have been a break-even trade. The only reason why, because it's not from any particular zone, so to speak. Let's look at this trade, right? So this was another big, massive 15-minute candle, right? Big, massive one. Now, for sure, I drew my voxel on this. So if you see this, I'm going to zoom this out. I drew my voxel on this, yes. And once I had that box drawn, what am I looking at? Once that 15-minute candle is printed already, I have already marked my zone. So my zone is marked. The second thing what I'm looking at is that you had a strong push, you had a pullback. Now, for a zone to be a valid zone for me, you have to have a pullback. You cannot have a zone that is just moving in the right direction with the proper highs and lows and highs and lows. You have to have a pullback and have that pullback and then have that push away pretty strong. So for me, this was high probability zone, absolutely, right? And it took the liquidity sweep, it swept the previous lows as well and then took out. So this is a sweep zone also, in my opinion. So I marked this out, price came in, and then it went up again at this point in time. So from here, 11:30, beyond this is the first 15-minute candle. So I'm not even bothered what's going on inside here. Once this is printed and the new candle starts printing, then I'm interested on where my liquidity is at this point, right? And my liquidity is at two places. One is behind this low, because this low actually created a nice push. But for me, that liquidity is not strong liquidity. Strong liquidity for me would have been when this low breaks this fractal high and then gets swept. That would have been a strong liquidity for me. And in order for me to take a trade, I need to see a strong liquidity. So if I don't take strong liquidity, the next thing I will look for is a battle between supply and demand. And I have to have very clear zones within supply and demand to help me understand how the price is reacting. And then do I get an entry moving in the direction of the trend that I want to go in? And I will go over some trades on the supply and demand piece as well. But so the next thing you will ask me, this low broke this high, yes? This is a low that broke this fractal high and then it got swept. Yes, this is strong liquidity. But always ask yourself this. The range of the first push is from this high, the fractal range is from this high to this high, yes? Then it had a pullback, a very clean pullback, and then it pushed up, but it did not break this high. So when you start pulling back, within this push, this is all internal of the internal liquidity. It's not even part of the bigger fractal structure because you're within the range of the bigger fractal structure. You see what I'm saying? So for example, let me show you here. When price is moving down over here, it had a pullback, it came down. It had a pullback and it pushed another structure down. So the fractal range of that structure is constantly shifting. And this is strong liquidity because this high broke this low and then it got swept. Perfect. But this low is within the previous range of the higher fractal structure. So this liquidity is the internal liquidity rather than the stronger liquidity that I would have wanted. The stronger liquidity would have been what? This low breaking the top of this high. So this becomes strong on the larger fractal structure, and then this gets swept. Right now, if I were to mark this, let me just say, give me 1 second, guys. So let's say right here, this is your strong low, right? Because it broke structure. This is your strong high, weak high. Yes? So this low broke this structure here, it broke this fractal structure here and it's pushed up, right? So where is my range? My range is right now this line and this line, right? So if I were to draw my range, it's this fractal range and it's this fractal range right here. This is my range that I'm playing in. That's the range. Now, unless these two get broken, these strong low and weak high stay intact. Everything that happens within this is all internal of the internal price action, right? So if I start getting a price action that prints me candle like this and has a strong liquidity, is all within this range, which means even though it's strong, it's the internal liquidity that is strong. And typically I would also, so that would be not a very strong confluence for me, right? The other not a very strong confluence is that you had a massive bearish candle into the zone. Now, when you have these massive pushes, I'm always wary. So if I were to take a trade like this, right? Let's say if I just with my strategy, I take a trade, my trade would have been at the breakout of this, right? Like this. This would have been what? A 6 pip stop loss. Now, a 6 pip stop loss to move to 2R, that's almost what? 12 pips, right? And that would have been a giant push for the next 15-minute candle for me to take advantage of, the next 15 minutes. So if this was for example, if this was like a 3 pip stop loss or 4 pip stop loss, I could have taken this trade anticipating that if it pushes high, I can at least get to 1R and then break even, right? So I did not take this trade simply because it was a massive push downward. It was a giant stop loss. And the price that was coming up was very corrective. So structure, right? Simple structure. You have impulse, you have corrective price, you have impulse, you have corrective price, you have impulse, you have corrective price, so on and so forth, right? So this did not put me into a lot of confidence. What did put me into a lot of confidence, for example, here, pushed up, then it was corrective in the direction of the impulse that I'm trading in. Pushed up is the impulse in the direction that I'm trading over here, and I will share this in a minute. But in this case, the push up in the direction that I want to trade, which is bullish, is corrective. So, I mean, I was like, I don't know what's going to happen here, right? The other way I could have looked at this is if I were to draw, this would have been the zone, right? Pretty straightforward. Price pushed and came in. And bottom line here, this would have been a zone if I look at it. This would have been a zone. So price went into this. Where did it react from? So I'm just waiting. Where is it reacting from? And I have to tell you this, guys, again and again till it's beaten into your minds that every single candle here has not been randomly printed. There is no such thing as random candle. It just reacted out of nowhere from somewhere. Even when high impact news happens. So if you're looking at FOMC or if you're looking at payroll and all that good stuff, when those happens, everybody thinks it's just random. The price is going to shoot somewhere. But if you study the spikes of those news items, they will go to a very, very specific location, typically a zone, a buy to sell inter-exchange, a buy to sell wick or sell to buy wick. It'll pinpoint it to an accuracy of 98%, and then it'll retract from there. So it is going somewhere. There is just no arbitrary place that this candle will react from. So when I am doing this supply and demand battle, my bias is bullish because the previous candle is bullish. I'm waiting. This candle is too long for me to get involved in because I will end up with a 7-8 pip if I wanted to cover the low of this. I don't want that. It was a big, massive candle. The liquidity here is part of the internal range liquidity rather than the structural fractal liquidity that I'm looking. Like, for example, in this case, you have the low, you have the high. So now this high and this low is the range of this fractal range, is the fractal range, right? The minute this goes up and it breaks this low, now this and this is the fractal range. Because the price has broken the previous strong or weak low, it's gone down. So the strong high from here shifts to here, and you have this. So for example, this is exactly what is happening here. For example, price is going up, going down. Yes, going up, going down, going up, going down. Right. This is what's happening. So in this case, price is going up, going down, going up, going down. The strong highs and weak lows keep changing as soon as the structure gets broken here. And this is what's happening here. Now, in this case, what happened was price is going up, down. And this is the fractal structure. But within that range, then price was printing another whole price action within that range. So this is internal liquidity. Coming back to this, so I waited for the price to react. The price reacted pretty nicely, and I'm looking to the level. Where did it react from? So it was a pullback, and then it pushed out. So it reacted from here. Waiting here. So where did the price react from here? Because it's giving me a push up. Look back. Yes, there is a clear order block. So this is the demand. If I take everything in, this is where the price is reacting from. So if I wanted to take a trade according to my entry models, I would have put a long position at the breakout of this, and the bottom I will cover over here, right? So that will be a 6 point or this range, this block, sorry. So that will be a 6 hour trade as well, 6 hour. But this makes sense to me. This stop loss makes sense to me. And then this I would run because I would have anticipated that I'll get 1 hour at least, and then over there. But because this low has created and printed a newer low, it never gave me an entry. So this high became strong. I'm sorry, not low. This high became strong. My anticipation was that if this is weak, right, and this is strong, this strong low would have printed a new higher high following the previous 15-minute candle. But it did not print a new higher high. It reacted from this and it printed me a new lower low, and it never gave me an entry. So you saved yourself a loss, an entry, a loss. And that's how you would have traded this, and you would have not gotten any entry.